All right, I am back from my 2-year anniversary trip to Hawaii. I can't recommend Maui enough. And I also can't recommend you travel and get out more during the summer. A lot of you guys have only been trading for a few years, 1, 2, 3, 4, 5 years, and all that time it's been a bull market. Here is a 10-year chart of the S&P 500, and really not since 2008. I mean, we're talking 7, 8 years ago. Did you really see a big correction? And we had a little mini correction in 2010, a mini correction in 2011, an even smaller correction in 2012, two corrections, and then we had a little correction in 2014, but not much. And we've had this steady uptrend all of these years, and many of you guys have been spoiled. I've been spoiled too. I had a record trading year last year in 2014, making nearly $1 million in trading profits. That's fantastic. But you have to put your foot off the pedal every now and then. That is the secret to success for trading and investing. You can't just have one kind of attack mode. If you ever watch soccer, they play with different formations. Football, play with different formations. As a trader, you need a different formation when the market is showing you different indicators. And right now, you have Greece, you have Puerto Rico, you have a lot of concerns. And for the past few months, we've kind of been in this holding zone. We had a huge run up in late 2014 in the S&P 500, followed by some downtrending, and then some even more nice running up in January and in March and in April. And then, since then, the market has kind of just not been able to make new highs. And now it looks like we're actually fading. And we might be in for a 5, 10, 15, 20% correction. And I'm hoping for that because that is healthier long term. What does that mean for you as a trader? Does that mean you shouldn't trade at all? Does that mean you should give up? No, none of the above. There's still going to be opportunities every day, every few days, and that is what you have to focus on. I did a video, I'll include that video just above here, where the media makes you think the world is ending, and people actually believe it, and it's sad because this is how the media makes their money. They need to have extreme opinions so that you tune in. Like when Ebola was going around and everyone thought Ebola is going to take over the U.S. And a lot of doctors, my first millionaire student, Michael Good, his wife is in the biotech space. And they're like, this is ridiculous. Ebola is not going to go viral. It's not going to spread like that. It's not that kind of disease. But the media made you think that. And what? A few people in the U.S. died. I'm not saying Ebola is meaningless. I know a lot of people in Africa and all over the world have been infected. And, I'm not trying to say it's irrelevant, but what the media did was way blow up your fears about it. And that never played out. So with the market kind of struggling, I'm not trying to make you fear, a bear market. I'm trying to make you accept it and to help you adapt, because there are still going to be plays, but you have to be more selective. You can't just hold a stock for 2, 3, 4, 5 days because, it has good news. And back in January or February, if you held some stocks for that long, you could have been rewarded. Remember my buys on VLTC here in the twos. All you had to do was, somebody clunk me with a lead pipe over the head and hold it for 2 weeks. And my position from the twos, I would have made 10 times my money. That was April. Now look at it. It's not spiking. And anytime it spikes, it dies pretty quickly. That is the current market. So you can take advantage of it, or you can, try to make your own rules and see how you do. Trust me, it's not going to be pretty. I highlighted two students of mine who had some good comments in the chat room today. Nels Doggy, he is a challenge student. He said, so glad I'm using your strategy. Kept me safe through this market so far. So this is what I've been tweeting, and this is what I've been saying in video lessons and webinars. The number one thing that you can do right now is stay safe. I'm not saying don't trade. I'm not saying take all your money out of the market and close your brokerage accounts. But just think, safety mode, safety mode, safety mode. Protect. If you look at my trading the past few months, I've been very far from perfect, but I've made roughly $20,000 a month with a small account. Remember, I'm trading with just $100,000. So I'm making 20% returns per month on average over the past few months during this slow season. And what have been my biggest gains? Well, shorting pump and dumps, JIDG. This was a great short. Buying earnings winner, NES. That was a great long. Here, this was a speculative long on the chart breakout. That was a little more speculative. VLTC, that was one of my longs. And OHGI, this one, I just nailed the dip buy on that one. Here's VLTC short. So I go short too when it cracks. And I didn't even alert this one. It was too quick. Sometimes that happens. And then INUV was a speculative chart breakout. So my most successful trades, buying earnings winners, buying technical breakouts. Right now, I want to tell you about RAVE because this one is breaking out above the 13s, and it's only in the 14s, and I know this isn't a penny stock, so it's not ideal. I have a small long-term position from the 12s, so I'm up, $1.50, $2 a share on that. That's nice for my long-term newsletter subscribers. But this kind of technical breakout, this is good. I bought the technical breakout in INUV, which eventually failed. It actually turned out to be a double top. But I didn't buy it right at the breakout. I bought it on a potential breakout here at 320, and it went to 357. I think it even hit 360s, 370s pre-market. So if you're buying for a breakout, don't buy it right at the breakout levels because in this market, most breakouts are going to fail. NES, I think the breakout, eventually failed. So, I was buying the breakout right here on this nice breakout. This was a classic breakout and it lasted for several weeks. But somebody who tried to buy this breakout, nope, you got screwed. So don't chase breakouts in this market. Another comment is from Wayner, and this is a young guy, and he says, thinking about switching from E-Trade to ShareTrader to avoid the PDT rule. I started in April with roughly 2,250 and grew it to 11,000-ish at the end of May. So, I highlighted him on Instagram. That's freaking awesome to go from 2,000 to 11,000 in a month. Mainly just going long on huge plays. Since the middle of June, I found myself dead on either about shorting, dip buying, or playing. I find myself anywhere up from 5 to 20%, but I cannot lock them in because I'd be out of day trades. Sadly, since no day trades are left, I find myself losing. So this is a common problem too, where you want to get out of a trade for either a profit or sometimes even a quick loss, but the pattern day trader rule hurts you. E-Trade, I would never switch away from that right now. E-Trade is far and away my favorite broker. They have borrows, they have executions, they have customer service. Interactive Brokers, also number 2 broker. ShareTrader, I still have an account with them, but I've minimized it greatly due to many issues. And for me, I just don't want to deal with issues. If you want to escape the pattern day trader rule and trade more, then yes, ShareTrader is the option. Consult your own accountant or attorney to see if it's right for you because there are some restrictions based on your geography. But, for me, it's not just about trying to grow an account from 2,000 to 11,000. I know many of you guys think that's amazing, but at the same time, it's not just about that kind of growth. It's about the lessons that you can take from your trading. So even if Wayner isn't able to lock in his 5 to 20% profits right now, he's on the right path. You want to have 5, 10, 20% profits. And, if you can only lock in a few of those due to the pattern day trader rule, so what? Do it. It might take you a little longer to get over the pattern day trader rule, but if you have a bad broker or the wrong broker, you're looking at some serious issues later on when your account is bigger. You might be like, oh, I'm trading more, I can make more, and your account goes up to like maybe 10, 20, 30,000, and then, the broker lets you down, as many brokers have in the past for me, and you lose 20, 30, 40% because their platform is down, or you can't get out of a trade, or they screw you on an execution. Many people want to try out Robinhood. This is a new app where it's free trades. I have heard the executions are terrible. They don't even allow shorting. So while you're tempted to, escape the pattern day trader rule and care about commissions, that is not the path to truly growing your account exponentially. Focus on good plays. And when there are no good plays, take time and study. It is okay not to trade on a day. It is okay not to trade for a week. Many of you guys think that you have to grow your accounts, every single day, and you're desperate to do it. And then you force trades and you lose 200, and you force a trade and you lose 500. Then you force a trade and you lose 700, and you're like, oh my God, I've just made 3 bad trades. Now I'm down 1,000. I have to get that back. So your mentality is that you have to get back to even. And that is how most traders feel, because remember, the vast majority of traders lose. Don't be that person, okay? If there's no great trades, you do not have to trade. I know it's tough. Trust me. I know many of you want to grow your accounts, and you're like, Tim, if I don't trade, how am I going to grow my account exponentially? Every now and then, you have to take your foot off the gas. You have to brake. You have to stop. You have to pause when the light turns yellow, or pause when the light turns red. Right now, the market is giving you a big-ass yellow sign. And many of you are trying to speed right through it, and you're either going to get in a car accident or a cop is going to pull you over. You like that analogy? It works. The market is flashing yellow right now. It's okay to stop every now and then. It's not going to be yellow and it's not going to be red forever. But most people, when they lose in markets like this due to impatience, due to forcing trades, due to not studying enough. I look at slower markets as an opportunity, you know? Many of you have to watch my video lessons, DVDs, and webinars, and you need to catch up. And when it's a hot market, when there's plays every single day, you can't catch up because you're trying to, please your girlfriend, wife, husband, pets, kids, school, work, whatever, debts you have. You're focusing on all of that, so life takes over, and then you just have enough time to squeeze in some trades. Well, when there's no great trades, you can afford to really invest time into your education so you can learn these patterns. Mark Crook, I got to bring him up. He's been a fantastic asset to the Trading Challenge. He just started making video lessons exclusively for Trading Challenge students. He's one of my students. He's up 400,000. And when there's no great plays, he's watching my How to Make Millions DVD. And he's just catching up. And so he said this, another slow day in the market. This was yesterday, watching Timothy Sykes' How to Make Millions DVD. And he actually has a good short setup for DSKX. I'll bring that up in my watch list tonight. And he found this epic quote from my How to Make Millions DVD. The outcome of a trade does not determine how good or bad it is. I know that confuses many of you. I get a lot of people with questions like, Tim, of course, the outcome determines how good or bad the trade is. If you lose money on the trade, it's a bad trade. Not true. Sometimes I am wrong about a stock or a trade, and I might lose money or even make a little money, but I would do the trade 100 times out of 100 times because the risk reward is superior. I'll give you an example. The other day, IPDN. So this is a speculative company. It's really done nothing, but it never really had any volume. They are kind of like a mini LinkedIn, and they announced that they're having 500,000 new members per month, which is very good, and the revenues are huge. So it had a huge morning spike from 2 to 3. I caught it in the 270s. I shoulda, woulda, coulda sold it in the 3s. I didn't think that it would crash so quickly. But it's kind of like this sketchy company. It kind of reminds me of Vigil. But should I not do that buy here at 270? Of course I'm going to, because I don't know how far it's going to spike. I don't know if it's going to stop at 305 or 320 or 350. And if I had been wrong here at 270, I would have just cut losses. If I'm buying into a wall of sellers, which happens sometimes. I buy here at 270 and let's say, it doesn't go up at all and then it's in the 260s. I cut losses and I say, hey, I tried for a morning spike. Turns out wasn't the right time to spike. And I lose 10 cents a share. But the fact that it had 35 cents a share of upside, I thought that there would be more, but who cares? I was wrong about my expectations. I was not wrong about the trade. And then when I dip bought it here at 250-ish, again, I thought that it could get back to 3. I was wrong about my expectations. It only got back to 280. But buying it here at 250, I would do that trade even more times than I would try to buy it on the morning spike because I like dip buying. And a lot of my students know this, and they bought it in the 230s and 240s, and they sold it in the 270s, 280s. So just because I mistimed this one, and I timed my dip buy actually pretty good on the afternoon breakout here, it doesn't matter how the outcome is. It's actually still holding up. This morning it touched 270 even in a down market, and it closed strongly. So my dip buy here at 252, I'd still be up for 2 straight days, despite all the shorts saying, oh, what a pile of junk this is. I don't regret either trade because my upside greatly outnumbers the downside on that. And just like NUGN, when I was shorting this pump and dump the other day, and I was shorting it on this bounce, what was my average price? Too many trades. I don't even remember anymore these days. Let me go to Timothy Sykes. This was, me shorting a pump and dump on the first red day, which is a pattern I will do again and again. And I shorted this at 357-ish, and I covered the next day at 312, and I made 12% on my money. So I missed this morning panic from 390s, but I was in chat room saying, this might be, a panic, this might be the day. And we know that pump and dumps can crash 10, 20, 30, 40% in a day or two. So it always, always, always is in your best interest to consider shorting a pump and dump when it's showing signs that it might crash. And this is exactly what happened. This is not anywhere near best case scenario from 4 to 3 in a day. Remember, it's already done this once before. If you look back a few days ago right here, when it dropped from 4.5 down to 2.5, it dropped $2 a share. So this $1 a share drop, and now it's come back halfway. That is not best case scenario. But when I shorted it, in the 350s, I don't know how low it's going to go. I shorted it right in here after this bounce had failed. And I'm just expecting it to retest the 330s and maybe break below, which it did going into the close. And it actually went down, to 307. I actually had a pretty good cover here for 50 cents a share. So I would do that speculative trade on IPDN over and over and over again, even though I didn't make much. NUGN, I made 12%, and I would do this one over and over and over again. And I'm actually considering reshorting it, but I hear there's more mailers coming out right now, so that's why the stock is up. So don't try and judge a trade just based on how you do. Judge it based on, what the risk reward is and how well you stick to the risk reward. If you say, okay, I'm going to short this stock at 357, and if I'm wrong, and it goes up, like I was shorting it right here. Right? So let's say I'm shorting it, okay, first down day, the bounce has failed. Let me short it here at 357. Well, what if it goes back to 370? Am I going to take the loss or am I going to risk it? I would hope that if that had happened, I would take the loss because my risk specifically was shorting it for a retest of this morning low. And if it finished, let's say in the 370s or 380s, that morning low, it's probably not going to get retested anytime soon. This would have been a fake out. But it turned out that I was right. This was the beginning of a nice little crash, even if, more mailers going out prevented it from fully crashing. But even if I had made no money on this, I would do this trade over and over again because, again, it focuses specifically on a pattern that has made me millions of dollars. And that's what you guys have to learn. Certain patterns are going to make you a lot of money. Certain patterns might make you some money because you're lucky. But just because you make money on a trade does not mean that it's a good trade. And this is very tough to teach people until you have a trade. I have to bring up PBMD because nobody else will. I see so many traders talking all about all these trades. And then one trade, PBMD, which no one in any chat room or newsletter wants to talk about except me because I was the only person warning people not to short it here in the mid-twos. Every other chat room, every other newsletter was pounding the table, shorting huge in the mid-twos, and they got crushed in the 3s, 4s, 5s. Some people even covered at 6, and they lost 30, 50, 70, 90, 100% of their accounts. So you always have to be careful about trades like that. Even though you would have been eventually right shorting it here at 250, 260, because now it's down to 127, so you would have made 50% on your money. This is never a good trade because you risk this, and you don't realize the risk until it's too late. So trust me when I say that I've seen all these patterns. I know you don't believe me. I know that my results seem too good to be true. I know that my millionaire students' results seem too good to be true. But the reason for our success is patience, choosing good trades, understanding risk reward, and repeating the process over and over and over again. I'm not lying when I tell you I have found the secret to making millions. It's just not what you want to hear. And it's not fun, and it's not necessarily easy, and it's not, what you would think. It's actually pretty counterintuitive. You must always protect against trades like PBMD because you can always get ruined by one trade, as several students of other gurus in other chat rooms have learned the hard way. And I don't take any, pride in it or happiness. I'm proud that I warned people not to short it. But, even my biggest haters, I don't wish big losses upon them. I want everyone to be able to, learn from mistakes, learn from my mistakes in the past, because God knows I've made many of them, and become better, more profitable traders. So when I say be freaking careful in this market, this is a raging bull market where a stock can do this. Right now, we are at risk of a raging bear market. And many people are trying to dip by the NASDAQ and trying to dip by stocks right now, tech stocks, thinking that, we're going to go back to the highs. Maybe we will. But right now is a time where you have to play it safe because I don't want you to risk disaster. And that is what happens. Before any big 10, 20, 30, 40% market crash, you're going to have a little bit of fading off the top. Very rarely does a market crash happen right from the top. And what do we have so far in the past few days? Well, we have some fading off the top. So please heed my advice. Trade safely the next few days, the next few weeks. July, August, September, October. These 4 months are statistically the worst performing, months in the entire year. Stocks do not historically do well. That's not to say that we're definitely going to crash. That's not to say that we're not going to go back to the highs. A lot of people have predicted the end of this bull market for many weeks and months and years now, and they've all been wrong. I don't make the mistake of claiming to know that I know where the market is going, but I do pay attention to yellow lights and red lights, and right now the market is giving you a yellow light. So slow down, be ready for a red light, be ready for a green light too, but understand that usually after a yellow light, it has to turn red for a little bit. And that's what I think we're going to see. And that's why I play it safe. And that's why I didn't even trade today. I had no trades. I have a few long-term investments. RAVE is actually doing pretty well, even in this market. So I'm happy there. But you do not need to trade every day. But you do need to pay attention. That's not to say just go away, turn off your computer, don't check the markets for a week, because there could still be opportunities any single day. Just remember to play safe. Thank you. I'll see you guys in the chat room. Tomorrow I'm also giving a trading challenge webinar, so you trading challenge students, get ready. Thank you.